Hello and welcome to Finextra. I'm Emily Horler and I'm here with Rob Hetherington of SAP, and we're talking about trends and innovation in transaction banking. Thanks very much for joining me.
Thank you, Emily.
What are you hearing about the evolving trends in the progress of innovation in transaction banking?
Yes, I think we believe that a lot of the dialogue is now centered around technology and technology innovation, which is interesting to us, obviously. So, this is a sector of the market which has been pretty advanced in terms of digitization. Transaction banks have offered, electronic interfaces to their customers and electronic transactions for quite some time. So, it's less around digitization per se, and it's more around other aspects that in part digitization are catalyzing. So, first one is around open banking. And I think a big theme that we pick up is the move to using APIs and microservices to open up your architecture, open up your systems for the benefit of customers. Obviously, other banks benefit from this as well. But in part, this is again, caused by the introduction of things like PSD2 and other regulation. But we actually think it's a natural consequence of digitization first and foremost. So that is one big theme. I think alongside that is security. So the ongoing concern about how to protect banks and customers from cyber attacks and cyber threats, etc. And this is just a cost of doing business. Ever increasing and improving technology and indeed ever increasing standards and higher standards are what banks are after. Trying to stay a couple of steps ahead of the hackers and the threats is key. Interestingly, blockchain, which of course has been arguably the hot topic in banking for some time, continues to be so, but to us that's more of a future-oriented innovation as opposed to something which is really impacting the industry now. We see the move to open banking, as I've described, much more relevant and much more fundamental in the short to medium term.
As you said, blockchain has been one of the hottest topics in the past year. How has the blockchain discussion evolved, and is there still a belief that the technology can revolutionize the payments industry?
Yes, I think there is. I think what I would say is the conversations have matured over the last year or so. If you look at what banks are doing, they're still spending a lot of time and effort and money experimenting with blockchain. If you added up the number of proofs of concept, the amount of investment going into R&D activities in banks, that would be a higher and probably much higher number than in the previous year. And you see this across across several areas of banks. So it's not only in the payments area, for instance. You see this in the capital markets business and in other parts of banks as well. Some examples of proofs of concept would be things like experimenting with real-time or near real-time international payments and actually moving transactions from existing core banking payments processing systems through a blockchain or near blockchain mechanism across to another bank in another country. And whereas that used to be something that took days, now this is possible to be done in minutes, if not seconds. So that's a real example of blockchain in action. Having said that, we still believe that blockchain is probably 2 or 3 years away from having a significant impact in this market. And most of the banks that we speak to would concur. There doesn't seem to be anything which represents an institutional move or a move at scale to adopt blockchain as yet. But every bank that I speak to believes that blockchain will be an important part of their landscape in the next 3 to 5 years.
One of the strongest cards established banks have to play in this changing environment is to leverage their existing customer bases. What are the key technologies they need to do this? And what are you hearing about how well they're pressing home the advantages so far?
So yes, transaction banks have always been at the more advanced end of the spectrum when it comes to engaging with their customers and exploiting technology to do that. So transaction banks have used portals and have provided electronic banking capabilities, online capabilities to their business and corporate customers for many years. And that still represents the major way in which transaction banks interact with their customers, and that still provides the basis for how they can exploit new technology to a greater extent. I think the key theme here is real time and driving real-time insight for the benefit of their customers. So every transaction bank aspires to offer an increasing amount of value-added services to their customers. To do that, they need much better understanding of those customers, but they also need to be able to deliver products and services in real time or near real time to basically take advantage of a corporate's need as and when it occurs. We see real time and near real time data and insight or analytics capabilities becoming much more important tools in a transaction banker's toolkit. And I mentioned previously that what blockchain provides the promise of is real-time or near real-time processing capability, and speed is something that corporates want. So anything which provides an accelerated response time is going to basically improve customer experience for a transaction bank and allow a corporate to get some competitive advantage.
Rob, thank you very much.
Thank you.
And thank you for watching.